So I think the easiest way will be, because the name already there, I will do it quicker. I give you the speech 1 minute each to introduce yourself. So let's begin by you, and we come back to me.
Happy to. So I'm Kjellén. I'm CEO. I'm one of 2 co-founders of the open banking platform Tink. And Tink is essentially 2 things. We like this to talk about the rails and brains of open banking. On the rail side, we have built a proprietary network of 3,000 banks across Europe in now 12 markets, where we allow our customers to aggregate data and to make payments. And customers is banks, financial institutions, down to small developers. On top of that, we build data services, which could be anything that helps our customers winning in a digital world, to be more data-driven, to use open banking for the best of their customers' use. That could be anything from data cleaning, categorization, product recommendations, to personal finance management. And the aggregation and payment initiation services that we provide as a platform, as a service, is and has never been the screen scraping ones. We've reversed engineered non-public APIs of the banks for the past 7 years. And back 2012-13, most people said, "You seriously going to go to jail for this?" And then we started to team up with our European peers, and we went back and forth to Brussels for a few years, and eventually we saw PSD2 coming. Was obviously a game changer for us. Our customers is using these services to build more data-driven services, but also to make sure that they're not siloed, that they are the one-stop shop and an integrated part of their users' entire financial life. This means that we can not only aggregate the payment accounts for PSD2, but we also aggregate through the APIs of the mobile banks. We aggregate assets, liabilities, to provide that holistic picture, and that we're going to continue doing post PSD2 as well.
We have to do the full turn. I'll
Sorry,
come back to you
yes.
later. Just one question, just to understand, because not everybody knows you. So for those you don't know, you have the book outside. Tink is in it, deposit solution is in it, digital Insure is in it, you are in it. So like that, you have all the details. But perhaps just 2 figures: how many countries are you deployed, and how much money did you raise? And how many users, perhaps, also?
Well, so Tink is now in 12 markets, works with anyone from ABN, BNP, or Nordea to the likes of Klarna and others. We're 170 people. A few months ago, we raised 56 million euros, led by Insight Ventures. We're now here actually to open up a local Paris office in Q2. So very happy about that.
Thank you. Welcome in France. So, Tim, your turn, same time.
Right, yeah. Hello, everyone. Thanks for having me. My name is Tim Sievers. I'm the founder and CEO of Deposit Solutions. And as the name says, our company is all about deposits. And deposits for customers, the end customer, are simple savings products, right? So this is notice accounts, overnight accounts, and fixed-term accounts. And for banks, deposits are an important funding category, funding instrument. About 40% of banks' balance sheet in the EU is funded through deposits. And what our platform does, and that's the purpose of our company, to build a platform that then banks who have customers can implement into their own offering to service their own customer base with third-party deposit products. And vice versa, for the banks who are looking for funding, this means that they can list their offers and massively increase the reach and the addressable market for their funding, and diversify their funding and make it more robust. So that's essentially what we do. We have also, to sort of crack the chicken and egg problem, opened up our own proprietary point of sale channels. So we actually own and operate end customer platforms where we market the deposit offers of our platform directly to savers, these sort of platforms work like a customer of our own middleware. And maybe just sort of a few numbers. And also we are based in Hamburg. I started the company in 2010. So and then 2 years later found out that what we do is called fintech. So we've been around for some time now as well. We're about a little more than 300 people now and have raised about $150 million in venture funding. and servicing overall about 100 partners in 16 countries, mainly European countries. We've now made first steps of going into the US as well, and so I guess we are here in Paris with a small office and team. And
you have customers in France. I mean,
yeah,
you work with Onet, don't you? Or
yeah, and My Money Bank. Also, yeah.
Thank you. Your turn, Joe.
Hello, Orgonasi. I'm founder and CEO of Digital Insure. So Digital Insure is a company specialized in protection insurance, and we have two activities. One is managing contracts for insurers and banks. So we are a third-party administrator. We're connected with the system of the banks and the insurers. And the other activity is we are a wholesale broker, and we sell the contracts we are managing to credit brokers and distributing brokers. So we're a company of 75%, so still fast growing. We are now also developing a lot mortgage credit insurance, which is very specific in France. It's an 8 billion market. It's a huge one. And that's where we have started 5 years ago.
Thank you. Laurent, your small startup?
Yes. Thank you for having me among this startup and fintech panel. Very excited. So my name is Laurent Herbillon. I'm leading open innovation for BNP Paribas, and we have many initiatives, aiming at leveraging the ecosystem and the platforms to accelerate our transformation and innovation. So I guess we'll have the opportunity to come back on this in a minute.
Exactly. I didn't ask you figures about BNP, but.
Hi, my name is Geoffroy Guigou, so I'm the co-founder of Younited Credit, and besides this, I'm the vice president of France FinTech, the association gathering 150 fintechs and insurtechs of France. So a few words about Younited Credit. We launched in France in 2012 as an online lending platform. As of today, we are a staff of 300. We've raised 110 million euro in equity. We have originated 1 billion euro in cumulative loans since inception, and we're quite proud that it took us only 7 years to reach this, whereas it took 10 years to German and UK leaders. And one reason why we are building the leader in online lending in Europe is the fact that we have our own banking license. So we are regulated as a full credit institution since 2012. And so our license is passportable throughout Europe. As of today, we are covering 6 markets and originating 35 to 40% of our loans outside of France. The most recent development, and we'll talk about it later, is about our credit as a service offer. Since the beginning of last year, we are providing banks, insurers, e-merchant, payment service providers with the ability to launch from scratch a consumer loan business. And they can use our banking license, they use our technologies, our staff through BPO, and it's growing really, really fast with very nice deals which have been launched a few months ago. And I think you'll have some questions later about this.
You know what? Let's stay on this one. I come back to you after. So you just launched that offer, so B2B one. Why? I mean, your offer in B2C market is working very well, as you just mentioned. You recently launched different countries. You even changed your name to be able to explain to foreigners countries that some wording in French don't work really. Trade union was a bit complex. So Younited is better. So why going in the B2B? Because many discussions we just discussed with Fido, and we had plenty of other discussion with other actors where sometimes when they move to the B2B, it's because let's say the B2C doesn't earn money. So let's go to B2B. Is it that or just because new line of business?
We are lucky to be in the consumer loan business, which is the most profitable business of the banking industry, with the highest revenues and the highest margins. So it's not a matter of revenues and profitability.
It's diversification.
First of all, when you subscribe a loan, most of the time it's through a point of sale, somewhere where you will buy something, be it online or offline. So clearly developing partnerships for credit institution, it has always been a very good way to scale your business. But on top of this, we were quite surprised because we have a lot of demand on that offer,
And the very first one to ask us to help them was Free Iliad, and it was 7 years ago. So 7 years ago, we were launched 1 year before in France, and at the end of 2012, they came to us and told us, okay, we've been working with Crédit Agricole Consumer Finance to provide loans for people who are buying handsets, mobile phone devices on our websites, and we are truly dissatisfied with that kind of partnership. And it was too early for us. We wanted really to build the best UX in the consumer loan industry in Europe, to gather enough data to be able to help those partners on the risk and scoring issues. So we had to build this, and 18 months ago from today, we thought, okay, now we are ready really to provide all those technologies and experience to that kind of partners. And our B2C business
with the same brand, by the way? Is it the same brand you use?
It depends on partnerships. For Free Iliad, who has 20 million customers in France, we are providing a Younited credit loans. We launched an offer with BPI France to small and medium businesses. It will be under the brand BPI France, so full white label. And we are doing it with N26 in France. So N26 customers, when they take a loan in the N26 app, it's provided, it's done by Younited, and it's kind of white label, this one. Because Younited brand clearly appears in the N26 app, but it's so seamless that the customer had the feeling that he get a loan from N26, so it depends.
So what's your strategies in this new business for you in the next 3 years?
It's
Sky's the limit?
That credit as a service business was 5% of our revenues in 2018. It's going to be around 20 this year, and as against many startups, we communicate on our revenues and NBI. So last year, NBI was 26 million euro. It shall be 50 million at European level this year, and 20% of this will come from the B2B. And our view is that in the short term, revenues from the B2B activity will exceed revenues from the B2C activity.
You answered my next question. Thank you. Any feedback on the first implementation you did with Free?
It works quite well. I cannot disclose any volumes, but
no, but more feedback. I mean, partnership, technical difficulties, not figures.
It's quite short to implement. Basically, it takes us between 2 to maximum 4 or 5 months for someone with absolutely no experience in banking to launch a consumer loan business with us. Sorry. So I find it quite short because it's always strategic moves. Another thing is that we see huge synergies between B2C and B2B that we didn't have in mind. So, for instance, we are learning a lot on scoring and using external data through that kind of partnerships much faster than what we could have had the opportunity doing only B2C. So as of today, very happy about it. And the last thing I can get out of this is that the technologies and the experience we developed for consumer loans find application on other kind of loans. So BPI France, they turn to us to launch B2B loans, basically. And many other banks are discussing with us to launch kind of fully digital mortgage launch. So we build an experience in one product, but with many applications in other kind of banking products.
Thank you very much. Team, saving, loans, two faces of the same coin. So you are one of the key players in Europe. I think your main competitor is Raisin, if I remember well, and for saving as a service. This has nothing to do with PSD2 that we discussed this morning, no current account, but still it relies a lot on European regulation, KYC, unification of customer journey. So could you tell us a bit more about the specificities of your business that perhaps we don't know so much?
Yeah, of course. No, happy to. And I think that's an interesting point you make. On many conferences, when it's about open banking, people focus very much on PSD2. And it's a quite limited view, I think. And if you look at the customer experience, really open banking is about enabling customers to use financial services and products also of third-party providers and not be captive in their home bank relationship. And this is really sort of quite an old concept, which is sort of open architecture, which I think together with Payment Services Directive 2, the sort of two worlds of open banking. And with this sort of slightly bigger concept of open banking, this is already a reality, right? So it's already there. It's a mass phenomenon. Of course, PSD2 is quite recent, but open architecture for many product categories like mutual funds or even mortgage loans in Germany, or structured products, and with us also in deposits, has become a industry standard almost. With deposits, we're getting there, but with mutual funds, you are very used to probably buying a Fidelity fund without having to open an account at Fidelity, right? And that's really what we enable for the product category of simple savings products. So it's the user experience for the saver that I can actually build a portfolio of different products at my home bank, or even it doesn't have to be a bank necessarily. It can be my point of sale of choice, where I can then access those different products. And this is driven very much, I think, like in other product categories, by two macro trends. On the one hand, regulation and technology are abolishing switching costs. And on the other hand, customers are getting more and more educated. So they will know if you're offering them a good product or a bad product, right? So the alternative to open architecture and open banking is not that you keep the margin, it's that you lose the customer. And that's very much a drive of our business on the point of sale proposition, right? Because we're a marketplace. We have our business has two sides. One is the point of sale who implements our platform for their own customers, and then they open up, and that's the open banking side of it. And then the other side is what you call deposits as a service, which is the funding play, or the other side of our platform. There is a treasurer, there is a bank that is looking at diversified funding for its balance sheet, and they can, on top of whatever else they do, they can list their offers on our platform, and then they reach the customers of Deutsche Bank, 8 million retail customers in Germany who have access to third-party products through our platform in their online banking at Deutsche Bank, right? Or of the cooperative banks, or like many other partners that have implemented our platform already. And that's a pure treasury instrument. And that's a no-brainer because it's pure optionality. It's a free option to diversify and deepen your funding base.
You just mentioned a comparison with the wealth management market with Fidelity accounts, but in that market, at least until MiFID 3, 4, or 5, the margins are so, let's say, dark and big that you can easily imagine third-party and open platform. I mean, the deposit market, zero rate interest rate market. How do you make money in that?
Right. So this is really simple.
Oh, you were rich before.
And that's actually an important point. If you think about it, previously, without us, if you have 5 banks and 5 savers, there will be 25 accounts that are being opened and run, right? Each bank will do the same thing for every saver. And they will, in many cases, as long as it's just about funding, do this just to get the client liability into their balance sheet, right? What our platform does is it puts a middleware in between, where on the one hand, the deposit-taking bank connects to once, and the point of sale connects to once, and then there will only be 5 bank accounts that are being run. It's the accounts that these guys, the savers, had with their home point of sale anyway. So we create a gigantic efficiency.
It's like a proxy. It's like a proxy of account.
Well, there's a subledger being run, but I'm talking about the actual the customer due diligence, the KYC procedures, the taxation. Our platform enables the taxation to be done comprehensively across all products, regardless from which deposit-taking banks, at the point of sale. So there's a lot of stuff going on there, and our platform deduplicates retail infrastructure. So we created gigantic efficiency gain, and we are the only ones doing this. So this is not comparable to some of the other players in the marketplace. And that's the justification also for our fee, because the business model is very simple. The deposit taker pays us a fee on the volume he sources, they source through our platform and keep in their balance sheet. It's purely variable and success-based, and that's the business model. And then we pass on a revenue share of that to the point of sale, so they earn commission income. It's a very simple business model.
Two other questions. What are the key drivers today for the development of your service in Europe?
Sorry,
what are the key drivers today for the future development of your
Yeah,
services?
so I think on the point of sale side, I already mentioned that I think sort of more there is a growing consensus, and that wasn't the case 9 years ago when we started this. But today, I think there's a growing consensus in the management of retail banks that, with regard to open banking, it's the alternative to opening up is not that you keep the margin, it's that you lose the customer, right? You have to enable yourself to service your own customers competitively in all relevant product categories, else they will be gone. And this has really, the sales dynamic for us has really changed, because at the beginning we had to explain to people why it's a good idea to be the first ones to do this. But now we can talk about why it's not a good idea to be the last. So in Germany, very much, this is already, every German almost has access to, Deutsche Bank has 8 million retail customers. They have implemented this. The cooperative bank sector has 16 million retail customers. They have already implemented our platform. So this is very much a reality, and we are internationalizing this now. So this is the point of sale dynamic. On the deposit-taking side, it's about diversifying your funding base. That's quite simple in a way. It might not be a priority with TLTRO programs being renewed and cheap alternative wholesale funding, but there are many treasurers around who remember that first, funding environments changed quite fast, so it's good to use the good times to diversify. And secondly, wholesale funding usually used to be more expensive than retail funding. It will be like that again when the quantitative easing is fading out. So I think that's the driver on the other side of the marketplace, the funding side.
Thank you. And the last question on that. Now you are interfaced with so many players, a bit everywhere, as you were mentioning. Will you stick only to the saving business, or you can do other things?
Yeah, that's our mantra. We are totally focused vertically on savings. Deposits is such a large market, and it's quite special. It's 10,000 billion euros just in Europe in deposits. And we really
small
want
margin,
to
huge market.
Exactly. We want to create a infrastructure, a middleware. We have no point of sale ambitions. We don't want to ever own the customer. We just want to be the middleware for other people to settle their deposits business in a better way than this used to be done, for deposit-taking banks to increase the addressable market for the deposits funding, right? Because the larger the addressable market, structurally, the lower the funding costs for any given target volume. And from the point of sales side, we want to this really changes the user experience for deposits, because it changes from one where I open accounts, even if people help me do this, to one where I actually buy products. It's much like buying shares and putting them in a portfolio.
Just before going to Daniel, very last question. You mentioned your international development. So just let aside Germany. Do you have feedback or things to share about the differences between all these different countries and the way they adopt your kind of offer? Is it quite the same reaction being from the south of Europe to the north, or quite different? Any specific feedback on that?
Yeah, so we started off with just German banks on both sides of the platform, and then I started to take more venture funding in order to finance our going into further markets. And we are now quite definitely very European already. We have partners from 16 European countries today, and we are doing first steps into the States, as I said, and the UK are now also as a separate market, basically. We have just launched our platform in Switzerland as a sort of first non-EU country to be active in on the point of sale side. And to be honest, the drivers are very much the same. On the funding side, every treasurer wants low-cost, sticky retail funding, ideally diversified. So it's very much the same. On the point of sale side, we do see that open banking has a different visibility. It's sort of in some markets it's more top of mind than in others, is our experience, even within Europe. But in principle, the forces at work, I think, are very similar.
Thank you. So another European player, Daniel. You were not there, and we spoke in French, but your name was mentioned this morning. So today, we discussed this morning with one of your friend and competitor, Johan, with the regulators about the question, is regulation a friend or foe in this fight for innovation that you are doing with aggregation? What's your point of view on that?
Well, I think it's two different levels here. One, a few years ago, as mentioned, most people said that this is going to be illegal, it's going to be banned. And I also respect that most of our customers are regulated financial entities. They or you don't dare and shouldn't maybe place large bets in unregulated areas. So I think that PSD2 was like a giant, this is the direction of travel. This is where the world is heading. And we saw that banks, innovative, forward-thinking banks, got the mandate and the kind of the framework to make significant bets. And that, I think, has served the industry extremely well. I think that the dangerous part here is maybe to over-regulate. You see already the kind of hiccup with payment account versus non-payment account. Eventually there will be PSD3 and PSD4, and meanwhile Tink continue to reverse engineer the non-payment accounts, which is, it just creates a lot of friction and hassle. I think that would be the downsides, and I think that going into the transformation period now up until September, there's going to be a lot of friction. This is not going to be an easy ride. I'm very happy and comfortable having those 3,000 banks in a proprietary network already, which works fine. And then whenever there's a new PSD2 set of APIs in place, we're happy to move towards those instead. But I think it's going to be a rougher ride than a lot of people think. From the bank level, I think it could be a mistake looking too much at regulation as a driver. Regulation is not a driver of open banking by any means. That is a big misconception. You see behind you a tsunami of new technology that is unlocking and changing this market completely, paired with new consumer preferences and demand. And those two together is what you should look at. I see sometimes banks focusing on we need to be compliant, and what does exactly this regulation says, and there's the force. That's what you need to consider. So I think it could be dangerous as well.
You are an aggregator, and you mentioned direct business to consumer, and also, of course, platform for banks and other actors. Do you see yourself also as an integrator of those services? I'm using your friend banking. I don't want to download, I'm sorry, I love you, but I don't want to download Younited, deposit, whatever. I just want, in my app aggregation, if I want a saving, if I want whatever. So also in B2B market, when you address some big customer, corporate customer, do you see yourself as an integrator of other fintech services, like could be deposit, like could be Younited and others?
I'm a huge fan, starting by what you guys are building. I think that saying that the deposit solutions is not open banking, I think that you are the core of open banking in so many aspects. And the fact that we are now the regulated part of open banking, that's something else. What we want to do is that we want to help our customers, fintechs from the largest banks in Europe, to be a winner in an open, transparent, data-driven banking world. And we want to be the platform and give them the tools and building blocks to build fantastic consumer experiences, make customers happy, and eventually make tons of money on that. We've started with the infrastructure and the data services as those building blocks. But I can also see in the future that a bank CEO or head of retail, head of digital, that wants to build that new bank of the future, they will and want a better interest account. They want a smarter compared consumer lending. And potentially, if someone is interested, that could also be a way for us to leverage the platform and the customer relationships. But it needs to start with our customers would want that. They should see a benefit that put together the pieces that we built and say, well, I need a mortgage, I need a savings account or something else. Then we could definitely see that going forward, but it's not something we do right now.
Let's come back to PSD2, and this is currently the situation between March to September. We are really in it. So this morning we had a panel with 3 French, so French regulator, French former regulator, and banking French company. Can you tell us your point of view from a Nordic country a bit more about how you see in other geographies post-PSD2 development and adoption by the market, being users, being banks, institution regulators? Your point of view about this situation today?
Well, I think that the big difference we see now is that the banks will be picked rather than inherit from their parents or customers. And I think that that is extremely important, and we see a new set of managers that says, I need to win this new world. I'm going to be a winner, rather than how can I fence it off till I retire. And however, and I think that's the same across Europe, but I see also differences in, well, you put it nicely. What did you say? It was a very polite way of saying how important PC2 was, how visible it was. Yes, exactly. How visible is open banking? I think that the Nordics, the Benelux, and the UK is right now ahead in building the digital experience of the future. That's my experience. It's not that every Nordic bank is fantastic. There are, and that means also that there are great innovative examples in France. You see them in Portugal. You see them in Spain. In basically every single market. But as a whole, I'd say those geographies stand out. I had. Well, it was actually one of your panels in Paris a few months ago, where we had a panel with the regulator, and the arguments and the kind of line of thinking was very much with her than as what I've seen in Europe actually a few years ago. So that was slightly took me by surprise. So I think it is definitely a big difference, but I think that the biggest difference here is that banks, this new market will be unlocked. Banks will for the first time get what they deserve. So if you're building fantastic products, you're going to have tons of customers. If you have shitty products, you'll have no customers in a more liquid market. And the ones who see themselves as, I'm going to be the winner in this new environment, that is the most important factor, whether someone wants to take bet. Or it's not which country you are, but rather what position do I think that my bank will have, or do I want to take a year or two from now?
Thank you very much. Time is running. So, Jean, we just spoke about account aggregation, payment services, credit, savings. Okay, there is also insurance market. So it's not a small one, by the way. Could you tell us more about the specificity of the insurance market, speaking of technology and digital transformation?
Yeah, I must say that the insurers are a bit lagging behind bankers.
Are they? Sorry to interrupt, but we are speaking when we say open.
It's not open.
I mean, open innovation for bank means banks perhaps tomorrow have other kind of sellers. They have a wholesale market. And what are doing insurance? For 100 years, they have a wholesale market. They have brokers. So, in fact, it was already there without technology.
Yes. Everything is there. But the tradition is not really there, and but thanks to technology, things are moving a bit. I must say, we are working with institutions today. We are working with 9 insurers, 3 banks, and what we've seen is that the way we are working with them is actually extremely classical. We provide all the new technology. And we are connected with the banks and the insurer the classical way. So we are sending files. We are using classical data exchange with banks and insurers. But the way they work with a company like us is really using our capability to interconnect with other systems. So, and they choose that because the evolution is quite strong. What we've provided, if I talk just 1 minute about the product we use, we are selling, we are providing protection insurance. Protection insurance is when you buy a product to cover yourself in case of death, of disability or sickness. So it's not funny at all. But it's always painful, it's long, it takes between 2 days and 2 months because of medical underwriting. And we have make a process that will take you 20 minutes inside or and not 2 months. So it's a strong move, but they are not used to integrate that in small pieces. So what is done today? We give everything and we have data exchange. I must say that with other players, like credit brokers or wholesale brokers, that's completely different. We are working with institutions and big players, and we are connected through APIs. For instance, we are working with the biggest credit broker in France. We are providing all their insurance, and we are completely connected through APIs with the systems. So we can really see that today, in France, the API interaction between banks and players like us are still lagging a bit behind. But with credit brokers, yes, the interaction is now completely fluid. We are working through APIs with them, and it's open.
Perhaps the answer to my next question is already in your answer here, but we see much less actors and success stories in the insurance, insurtech market in Europe than what we can see in all the other one we just mentioned here. What are the reasons for this difference of rhythm? That doesn't mean that there are no actors, but they are much smaller, and you see sometimes one or two, like Alan is very big in France and so on, but still, compared to the other stories, they are much less numerous and so on. What is the explanation? You are a specialist of that market. I don't know if you have any explanation.
I don't know if I have an explanation. It's very difficult because when you do the work we do, we have to create partnerships, which takes very long. Each the big institution we have today, it has taken between 1 year and 2 years to do the partnerships. So you need really to be quite strong and powerful in order to succeed in the insurance industry, because of all the time scale it takes you to create the right partnerships. And frankly, I'm not surprised why it's so long. As I said, each new partnerships, 1 year, 2 years, and then you are.
So you see, you complain about banks, try insurances.
Same thing. I'm sure you have the same thing in your countries. It's same story. And of course, that's why it's because when you develop a full system, a full digital system, you have to be really deeply integrated with the institutions. We exchange a lot of data. It's extremely all the constraints that we have to put in place are very strong. We have to protect the data, and of course, it takes quite a long time. So, and huge investments to do so.
Thank you very much. Before going to Laurent, just to mention, because I see some people trying to take movie with a very small smartphone, we have 3 very nice cameras here. Everything is video captured, and it will be for free on ACSEL. If you are a member, and if you are not, very easy to become one, by mid of April. And we have also very nice photographies, don't worry, you can ask. So, yeah, exactly, because we pay someone to make you look better with the cameras after that, you know. Otherwise, it's complex. We are all getting older. By the way, Laurent, your turn. So we were speaking of banks, insurance. You are both, by the way. First, what's your vision of open banking at BNP Paribas?
I must say that, maybe it could surprise some people here. I do agree with most of the things, I have heard this morning. And I think we are already way beyond open banking and the PSD2, which is, a compliance exercise, which is very important because, of course, it's going to accelerate things. And today's topic is platform, and it's everything about platformization, which is not really new, actually. I mean, platformization have been around for the past 20 years. They are born in the digital era with the digital pure players. And what we see today is just the ability to connect people, resources, product and services, all together through a seamless customer experience. And for the banks, it's going to be the ability to push product services within third-party customer experience, or to integrate in our own, customer journey, your third-party services and products. So it's not new, but it's hitting, the bank industry, and for many reasons that have been mentioned this morning, regulation, security, legacy, IT legacy. We are lagging behind. But I think we can learn many things, from what happened in other markets to make it, faster, smoother for the benefit of the industry. So we think it's a fantastic opportunity to rethink, reshape our customer journey, and it's ultimately the ultimate achievement or goal of open innovation platform.
A few years back on that stage, bankers, when I was speaking about open innovation, cooperation, they say, yes, very nice innovation, but scalability, security, complex. My impression when I see all those guys, I mean, they are like big base customer base and so on. Do you also witness that change? I mean, the fintech working with you now, they are also more mature, able to face these scalability issues, these security issues?
Yes, definitely. I mean, we've been working with startups now for many years. Like many banks, we started, to try to understand, what the startup world compared to maybe incumbents, 200,000 people, a company like BNP Paribas. And we've been learning, but also the ecosystem and the startup have been, learning and maturing. And what we see, it's through specific acceleration programs we put together. We have one in Station F with Plug and Play, for example. We are really able now to deliver POC and MVP in a very efficient manner, and also to move 1/3 of those POC to production and industrialization. So it's not, only communication or buzz. We really do things, very concrete things with startups, and we've been learning. Startups also, learned how to work with big companies, and we see more maturity, and also we see our ability and their ability, to pass the compliance and security checks and to make it, smoother, faster. It means that we have also, for example, at BNP this morning we were talking about procurement, culture, and IT. It's not only about IT; it's also about culture and process. For example, we at BNP Paribas have a special kit for startup to make POC and MVP easy. We have a specific contract. We have a specific kit to make, to shorten the onboarding process. So it takes time, but I think we're really much more prepared to work with startups. And of course, APIs. It's the key word and the magic word, that have been pronounced this morning. We have opened this week the BNP Group API store, where we're going to expose not only the PSD2, APIs, but also, APIs for business, API as a product. And why we're doing this, of course, not only to comply with the regulation, we do this because it's a great opportunity to shorten, the onboarding process and the partnerships with startups. But also, we really think that we believe in serendipity, to look things, to find things that we were not looking for, meaning that by exposing APIs, startups, fintech, are going to find usage, to some of our data and services that we haven't thought of right now. So it's a big step for us in this open innovation and open platforms, movement.
Is this API store like a business to business between us like that, or also like is doing Revolut on its interface where you can just use it? I'm a user of Revolut and I can plug it with Zapier directly and receive all my transaction on my Slack, for example. Are you doing that also soon?
At this stage, we are targeting, TPP, of course, but we're targeting, partners. We're targeting, current partners. Okay. We're targeting startups and fintechs, but not only fintechs, because we think, and coming back to your questions, on the platform economy and the platform-driven, models, we think that this openness is a great opportunity to build new services adjacent to our core business. So we're really, aiming at working with all the whole ecosystem, and I think also that it's going to help us to improve the way we deliver those APIs, meaning that beyond the platform, beyond the project we build with many people, actually some of them are in the room. It's also such a project of having this API store is a great way to mobilize people internally, so they can understand very concretely, learning by doing, the importance of the platform and of the APIs driven finance.
To conclude, we spoke a lot this morning, the full morning, B2B. I mean, we are all selling or buying the services of each of us here. Let's speak about a few minutes about the customers, the end users, that we are also are all of banks and fintech. What do you think in the really near future, your all services, question for everybody, your different services will be able to bring us new customer journey, new services for the end users that we are all in the room? So do you have any specific thing in mind already at BNP? I'm also a customer.
Yeah, I mean, we see that beyond the payment that have been mentioned this morning, the field of application is huge. Just to give you maybe two examples. One is you're browsing a property site, just looking for a new home, a new apartment, that you can imagine tomorrow that instantly you can give to the person browsing the site their ability to borrow part of the price of the property and to give push some proposal, or to tell the customers it's going to be a bit expensive, knowing the information that you authorize me to analyze, that will be a way to immediately see that such and such property you can afford it or not, and you can have already some proposal from banks from the banks. So that's very concrete. It's going to combine APIs, instant ability to score you and see how much you can borrow and reimburse. That's the type of services. Or another one, I think, which is not BNP actually. Maybe you've heard about the HSBC Business Hub. It's a very interesting approach where they're going to connect their corporate clients, SME and corporate clients, because that it's another HSBC client. So basically, you can trust this client, and you see you're going to combine trust, brand, data, and also the ability to do a cross business among your own clients, and it's a kind of a socialization, way of doing business. So we see many new ways of doing business on the core and also adjacent to our core activities.
Thank you very much. Before concluding, perhaps 2 or 3 questions from the audience.